Hello again, and welcome back to another GameStop daily review video where we're going to go through some data, some price action, technical analysis, talk about our favorite company, and even some tinfoil for you this weekend. A little bit late to our video. My apologies. I was busy being best in the world at Magic the Gathering Arena, locking in that #1 mythic rank position. And thankfully, we get Monday off for Labor Day to do our reviews. So GameStop is down 1.7% on the day. We are failing to reclaim that 21 moving average, and just compressing downwards further. I still believe in our AMD pattern here a little bit. Earnings is in 8 days, right? So we get 1 week of trading, which is a short week because tomorrow's Tuesday already, and then earnings is next week, right? So just a couple more trading days. So I don't expect this to die more. I honestly don't, unless something crazy happens in the broader market, right? Maybe the market crashes and then the manipulation leg happens. However, I kind of think we might get this pattern invalidated. As much as I'd like to see it play out, we're not getting that pre-earnings run, and I wanted the pre-earnings run, then the earnings dump, and then we go until the end of time. But it's really a waiting game here, and I was expecting us to retest top again, right, and then dump back down. But we're just grinding down on that low trend line, not breaking down by any means, but just like no volume, very low liquidity. Which brings me to our first bit of tinfoil, and I might get myself a tinfoil hat for these sections specifically. That is an awful lot of liquidity there, isn't it, Larry? People are saying it's like a blue ocean trading strategy. Awesome. Could be. Creating a new market space. I wouldn't mind that. But I'm just taking it as that is a lot of liquid, dude. And we've been in a period of very, very low liquidity. Our 30-day average volume, less than 7 million, right? Current day, the other day, 5.3. So, we don't even have the low volume posts anymore because it's like just all low volume. It's like, wow, new record again. Wow, that's super exciting. So, waiting for it to come back, and that's a big part of my small cap trading strategy. Check out those daily review videos. I do that as well. We love a low daily average volume, and then we hit it hard with an influx of liquidity, an ocean, baby, a fresh volume, and that is really going to move the stock, which I'd love to see. So, not great here, right? We got Larry hanging out with us there. Let's take a little bit of a gander on the option chain because it was starting to load up, right? The previous day, I was like, okay, there's some volume on the chain actually really starting to load now that we've had earnings announced. And, we gave it all back, right? We're back to right where we were. So it's going to be an interesting week to see how that unfolds. Max Payne, 2250. For the week upcoming here, yeah. And we'll see where that ends. I'd like to have it work up throughout the week, maybe 2350 by Friday, dare I say. A lot of out of the money contracts that will need to go in. I imagine the majority of them are roasted, right? They had a down day on Friday and then a 3-day weekend. A lot of theta decay if those were fresh entries. And if they weren't fresh entries, we're still trading sideways and down. So I can't really see a lot of these out of the money contracts being near break even or green at all, if I'm being totally honest. So even if they were to go in the money, I'm sure they would just bleed off because a bag. So when your position goes red, right, X% specifically in options contract, and it comes back even close to being at parity at zero. say you go negative 40% and then you can get it back to minus 5%. Most people close that position at negative 5% and take the small loss because you don't really want to be holding and say, oh, I want it to go green 40% now, right? Because you're already wrong. Now you're just reducing risk and mitigating the downfall. You don't necessarily have to do that with your shares. You can hold through the lows, but the option contracts, you don't get that freedom through theta decay, right? Every minute you hold that, you're paying for it. And sometimes, your intrinsic value isn't there anymore and you've lost all your extrinsic value. So it becomes worthless. And you don't want to be involved in that because sometimes these contracts are expensive, right? $100 a contract, you gotta get 10 of them. There's a fucking rack. So then you melt it, and then the next week comes you again, right? So you got to be really careful when you're close to your expiry date, and you want to make sure you play it in the money if you can to try to mitigate some of those downfalls here. So, anyways, I digress. Let's take a look at each week, right? And we're going to take a look at the volume here up top for Friday. And then the open interest, which is kind of what is remaining on the chain. Now, this is going to update again on Monday, so we're not entirely certain how things settle here. You kind of just take it day by day and compare them as you go. September 5th, that's this Friday coming up. Seen a lot of people loading these 23s. Like, this is 10,000 contracts, 10,500 contracts. And let's get Yahoo open as well so we can kind of look how expensive these are. Yahoo GameStop options, perfect. And what strike was that? These were 23s. Oh yeah, there they are, 10,500 volume. And so these are still $18 each, right? Not expensive by any means. Maybe we should have bought some lottos. We'll see what they open up on Monday here. Maybe still some time to get them. I'm just kidding. This could be people shedding their position as well, right? You don't know that this is buy volume until the next day's open interest comes out, right? But there was quite a bit of volume here. Good liquidity. But like I said, it was a long weekend, right? And, this contract is going to melt down. Can I see the theta if I click into it? Will it show me? No, I might have to look on my actual broker. So the theta will have an amount, usually a decimal place if it's a cheap contract anyways. And that's how much the contract is going to bleed each day. And of course, we can maybe go through this one day. It's not linear. It's on a curve, and it is exponential, right? So the closer you are to expiry, the harder that is going to bleed as far as a percentage point of the remainder goes. So a lot of volume here, right? Only $18 contract. Could be worse. So let's see, maybe we get these in the money and that acts as like our first little stepping stone, because as I look through here, there's a few stepping stones, right? 23, 25, 30. 30's too far. I don't know if we're going to get there. You'd have to have a really good earnings at this point, honestly. I mean, I wish we would, but there's a gap to fill. You might get 28. We see some puts here. 2,500 puts for 22. That's honestly, like, if we do break into that manipulation leg, those 22 puts are printing, right? And not that someone's just specifically going short. This may be the exact same person that's buying these longs, right? So you could go long 24, 25, short 22, right? It could very much just be part of a larger strategy, one leg of it, right? Yeah, so we see some puts on the chain, which is healthy. You want to see, because it takes two to tango, right? You got to have both sides of the trade, or there is no trade, right? So it's nice to see people gathering near the money. Like, implied volatility is good to have into earnings, and a lot of 25s. Like, man, that is absolutely crazy. So let's see if those hold. Let's see if these get added to this. Maybe this opens up tomorrow at 18,000 25s. Wouldn't that be crazy? Moving out, The 19th here, not as much. I mean, this is 2,000 in comparison to 10,000, right? They're going to be a little bit more expensive as we do move out, right? If we check out the 19th, right? You see, we go from $18 to 148, right? Well, those are 24s. So it'll be a little bit cheaper, 94 cents, right? But still 5 times more expensive. And that's basically the theta insurance, if you will. Where are we? Looking at the chain. So not a lot here, a little bit. Total volume 16,025s, right? So if we could get these in the money, that's just a lot of obligation, or like a hedging obligation. That would be good to see, right? Because then they're going to go and buy us, depending on, I guess, on the delta, specific amount of shares to cover the hedge if we slip above this. A lot of puts here too, though, right? So a lot of activity here. Excited to see how this closes out this week. Nothing going on here. I mean, there's 200, 100, like there's no volume here, dead chain. Except for this. This is interesting. That's a lot of volume on the dead chain, right? This is 5,000 calls at 26. September 26th. Interesting. This is a chunk I'd like to watch. October 3rd, nothing. There's no volume here really. Not here either. There's no 5,000 chunk here. October 10th, literally nothing on either end of things. Must be like a new week. 1.8 thousand at 25. That's not bad. And this is probably the same person's bet too, right? Like, because you don't want to allocate the majority of your money out of the money. That's higher risk, right? But higher reward if you get there. So you see like 1.8 thousand at 25, 1,000 at 30, and 600 at 40, right? So this is probably someone just targeting October 17th. I like this. October 17th is a nice week for us. Like, pretty good ramp. If we could just fill this void here, the 26, 27, 28, 29s. We just have like one more spike right here. That would be great. And then even fill up these 21s a little bit more. Right? See how this is like not spiky. It's like prolonged coverage. That's what we want, right? We don't want these big spikies. We want up and prolonged coverage, so it actually kind of does look like a ramp, right? Not like these are just massive spikes, and that makes it easy for them to kind of flip the hedge, if they will, in the dead spot between, because they aren't forced to hedge till here, so they have all this space to play with. Anyways, into the leaps, right? 26s. There's some activity here, like some in the money activity. Like, who is buying $10 26s? You know how expensive these are? I don't even want to look. Those $10 calls are $1,300 each. That's crazy. And there's a lot of them on chain. And those are all in the money. Gross. And the leaps are like that. Like, we got a bunch of 15s, a literal buttload of 20s. Oh my God. You'll never break below 20 as long as these are here. There's your floor. Jesus. And that's how we want this to roll out, right? Because we want to now get above 25. Now this is our floor, because there's even more at 25 and even at 30, I guess, right? So this is nice. Like, this is the ramp we could potentially be building in the future. Like, everybody wants to ramp this week. Oh, it's earnings. Where's my camera ramp? I need to squeeze this stock, but here, if we get good earnings and we can trend up for a couple months, actually get in on a nice trend line and go for it. Push all of these in the money. That's what's going to set us up. So it's a ways away, right? This is some time. What are these? January 2026. But it does go by. That's not that far. That's just after Christmas, right? So, no volume here. About 1,000 here. Not really anything. Again here, nothing much. Well, I mean, the open interest is nice here at least, right? We've got 7,000 here, 25. Another chunk at 30. And this is like the problem. We don't want to put all of these to waste because there's a lot of open interest just out of the money at the 25, at the 30 strike. We need good earnings to get those in the money and have them now act as our floor. Furthermore, watch the chain, because if people take profits on all those, then there's no reason to have the floor anymore, right? So, if we spike up to 30 or 40 and instead of rolling upwards, raising the floor, people just pull it out, then, there isn't one. So this is why we check it out every day. Now, I start to find this a little bit interesting too. This is 13,000 $10 puts for 27. $13,000 at $1 each. Well, it would be $100, of course, right? So that's $130K on these puts. A lot, and there's a lot of open interest here on the puts, which is it's so far out of the money. It's not like a 20 put or a 22 put, which is like, ooh, someone's playing. This is like beyond my comprehension. Like a married put, I guess, is the only thing that I can really think of, because that's a lot of downwards pressure, like a lot, and we have just as much at 35, which is less crazy than 10. I'm going to be honest. We're infinitely more likely to tag 35 than we are 10 on a liquidity spike. And then, the open interest is just crazy. Like $36,005. And if you want to buy those, well, it's 23 cents. That's not terrible, but I'd love the riddle to be solved, like for reals, because this is like, I feel like if this gets shedded, then we'll see price improvement, right? It's like, it's probably a tool to suppress volatility, is like my conclusion, I guess. Because obviously, someone who's managing a multi-million-dollar position can afford, 130K to suppress volatility in a period of high exposure, right? I'm sure these things happen. I would love to know the official explanation of that. And then moving on, it's the same story, with just a lot of puts, $164,005. That's insane. At $61 each. That is a absolute buttload of a strike that we'll never see. Like, these are not expiring in the money. And I doubt, since we're already seeing lows, that these ever see this price again. Right? Now, let's track this, right? Like, do these puts go up in price just based on volatility? So if the price goes from 23 to 26, are these puts decreasing in price, or have they increased in price specifically on their underlying Greeks? That could be. Maybe that's the play, and it's just a volatility instrument. I think it's to suppress, but at the same time, it could be doing more than one thing, right? So that's the options chain. Um, there's some interesting stuff here. Specifically, I think on October 17th is looking pretty lit here. Really nice if we can kind of get earnings and push these in the money. And it also relies on the people, right? Like the people holding these contracts. Are they going to sell these on a pre-earnings run-up? Like me? Are they a coward? You know, like myself. I scale out. I lock profits. I've had contracts go red before. So you get them green on the run-up. Say you have 10 contracts or 100% of your contracts. Maybe you sell 80% of them. You pick a percentage that's okay with you. And then you can learn about IV Crush firsthand. That'll be fun. But sometimes, you don't get that. Sometimes, you just have a stock that blasts up 50% on earnings. So it's not it is actually really unlikely, but it's happened before. Volatility, kind of trending sideways, kind of matching our price, right? Nothing really going on here. We've got our shares to borrow, chilling at 5 million. Our fee remains steady, and our utilization kind of just bouncing between that 65, 55. Here's your additional tinfoil for the day. 10-year-old dormant account comes back, named Roaring Kitty, which is curious because it is 10 years old, and their only other post was about stocks. But I don't typically look into this. And then the last time Rory Kitty tweeted, and all the times were on 4-day weekends. So that's kind of cute as well for the Tinfoil Club. I just kind of like the data. I like the technical analysis that I'm comfortable with, right? Because I know how to trade the way that I trade, right? I know my results, and that makes me quite comfortable. A lot of these outside things really just shift opinion, and that can lead you to make a decision that may be unwise. However, they are also sometimes, I feel like, guardian angel guideway posts for people. Larry, looking at you, which is fine, right? It's cool to have people like that around because not everyone's willing to help out, right? Some people steal hats from little kids. You think Larry would steal a hat from a kid at a baseball game? Hmm? Anyways, if there's anything else that you'd like me to cover in these videos, feel free to hit me up in the comments. I'm happy to go through anything, add it to the routine, right? This is very much something that we can shape as we go, because it's not about just one run up. It's about 2 years, 3 years from now, the channel for the foreseeable future, right? So times is tough. I get it, not great, but we can have some fun while we wait. Our conviction is high, and time is going to go on regardless. So thanks again. Have a great day, and I'll see you soon in the next.